Back on Morning Movers with another look at Nvidia. It's in the crosshairs of regulators in China. The economic superpower says that the company violated its anti-monopoly law. Shares are taking a hit this morning as a result. Keep in mind, Nvidia hit an all-time high of 184 last month. It's rallied nearly 50% over the past year, closing Friday with a market cap of $4.3 trillion. Time now for Options Corner. Joining us to take a deeper look at Nvidia, it's Rick Ducat, lead market technician here on Schwab Network. All right, Rick, talk to us about the trends that you notice on this chart.
Yeah, obviously outperforming not only the S&P, but also its tech sector peers. Here we can see Nvidia up more than 52% during the past trading year. When we look more closely, though, it paints a picture of a stock that's seeing momentum slowing for the most part here. We can see that we had this blue trend line extending all the way up from that low point, 86.62, during the tariff news shock event here. Then we had a strong rally that took us above those initial highs, topped out near 184, 185, around that area. From there, though, momentum trailed off, bearish divergence on the RSI as price made higher closes and momentum trended downward here. But now we can see that a rather curious situation has developed here. We had this triangular shape here between our two trend lines converging toward each other. We had what looked like it could have been a break to the downside that stabilized at our green line near 165, a high point and low point that was repeated, but it's also our orange 63-day exponential moving average here. So we had a big bounce. Now we're back within our old boundaries here. Our old triangle has come back into focus here. So a very narrow set of price targets here would be leading to a breakout there. So if we were to move above that triangle, 185 obviously is the upside point to keep an eye on here. So when we do also look at our volume profile study, we can see that the 180 area is about our +1 standard deviation channel, one standard deviation up from our blue linear regression line here. So by one measure, it's a relatively extreme price. It could be viewed as a potential source of resistance here. We can also see it lines up with the volume node, a heavy trading area. There's another one right here near about 173 as well. Finally, if we were to look at our expected move area for the October 3rd series here, we can see that if we were to look a little bit closer, 170, 171 stands out. It was low points here, high points here. That was where our gap developed, and our volume node. But the overall boundaries would be around 163 to 187 or so. So that would give you a potential range to consider for planning your trading going forward in this name here. Certainly a name that would be in great focus going forward with all the tariff news and other information.
Thank you, Rick. Appreciate that. That's the Duke of Data himself. Now to take us through an example trade, we've got Tom White, senior options contributor. All right, Tom. So we've got a little bit of pressure on Nvidia today, but look, I mean, this stock has, made quite the recovery since April. It's having a banner year now. What's the approach for an example trade?
Well, you take a look at it, just the price action this morning, we were down nearly 3% at the session lows in the pre-market. Now we're down just over 1%. So it has made some ground up. What kind of impact is this news going to have on Nvidia? Well, it's probably not going to have a big impact at this point, and I think that's what the market's queuing off of at this point, even though it is lower in the pre-market. So I looked at a strategy that's kind of a twofold type of strategy where, hey, I either want to collect some option premium on this pullback in the shares and just keep that as a profit, or I'm willing to buy the shares if it does continue to slide to the downside and it gives me a cushion to the downside before I have to purchase those shares. So I looked at a cash secured put here, really short-term positioning. October 3rd weekly cycle, so about 18 days to expiration. And this is one of those repetitive type of strategies that you can do over and over again if you believe the stock's going to remain above a specific point. So in my example here, I looked at selling the October 3rd weekly, the 170 strike put. The stock opens up around 175. You're going to collect roughly about a $3.20 credit. That's what you could make on this trade, $320. But what it does is it takes your break even down to 166.80 to the downside. That's over 4% below where the stock looks like it's going to open up about 175 on this one. So you've got that bigger cushion here to the downside before you start getting hurt on this one. Now, you've got a lot of risk if the stock goes to zero, right? But what happens is if this stock goes below 170 at expiration, you're going to have to purchase the shares. If you're still short those put, you're going to get assigned on the shares. but you break even 166.80. So you got it at a discount to where it's currently trading. Now, if the stock just kind of stays here, bounces higher, or even goes lower, you can be wrong. You can still be profitable on this one with that 4% cushion on this one. And I mentioned it's one of those repetitive type strategies where, hey, if you pick out a strike where you think the stock's going to remain above, you can do this repeatedly. But then if you do get put the stock, you're buying it at a discount to where it's currently trading. Now, this is a high probability trade. You've got a probability of about 63% that short 170 strike put that you're selling in this strategy is going to be out of the money at expiration, which is maybe what you want. You just want to keep that $320 per put that you sell, or you're willing to buy the shares if it does reverse even lower and fall below 170 into expiration over the next 2.5 weeks.
All right. Thank you, Tom. That's an example trade there for NVIDIA. As he mentioned, it's off of the lows that we saw earlier in the pre-market. We'll certainly see how it performs once the market opens. That's Tom White, Senior Options Contributor.